Welcome back to the channel, MegaWhale team. Thanks for tuning in. We've got a lot of stuff to cover today. We're going to go over Luna to start with. And guys, Luna is officially dead. Take your little glimmer of hope that you've got. If you've got any hope, if you're holding a couple million coins, you can take it, you can crunch it in your hand and chuck it in the bin. It is never going to recover. All right? Unless they make some drastic improvement, it is not going to recover. In the current state that it is in, it will not recover. They have recently inflated the circulating supply to 6.5 trillion. What does that mean? It means for the dollar, for the Luna coin to reach $1 again, it would have to reach a $6.5 trillion market capitalization. It is never going to happen. It will never happen. Cryptocurrency as a whole has never reached even close to that number, let alone one coin. And I just want to point out, guys, UST, it dropped a significant amount. So many people were calling buy UST at 70 cents. It's the trade of your lifetime. It will bounce back. It's a stable coin. All right, I can name a whole bunch of influencers. It proceeded to drop to 0.06. Wrecked, absolutely wrecked. And Do Kwon is on Twitter posting about this, talking about how he didn't sell any UST or Luna during the crisis. Well, of course he didn't. He sold before the crisis, obviously. He didn't sell during, he would have sold before. And he's trying to tell you guys that, quote unquote, what we should look to preserve now is the community and developers. Mate, there's no communities and developers. That everyone is destroyed. Everyone lost their life savings. What are you talking about? You know, he's sure that the community will form a consensus around the best path forward for itself and find a new way to rise. And here's him saying he's dropping accountability. He's basically tapping out. The community will form a consensus and they will find the best path forward and find a way to rise. It's over, guys. Terra's done. Luna's done. UST's done. I wouldn't even worry about this coin anymore. Honestly, forget about it. Anyone who got wrecked, it's awful, it's terrible what happened, just move on. It's honestly, he obviously is showing no signs of sympathy. It's fake. And obviously he knew or had some kind of inkling what was going to happen, and he obviously allowed his entire community to get slaughtered. Whether he was behind it or not, I'm not too sure. I don't really care. The fact of the matter is, who we need to be worrying about right now, the people who are suffering, because 22 people have killed themselves over this crash. And look at this crash. Look at this, all right? I don't even want to talk about how I predict. I don't even care about how it's beyond that point now. Look at the price, guys. Look at the price. We can literally, I'm just going to get rid of it. We can literally scroll in. I'm scrolling in. Look at this. Look at this. Insane. Look how much I'm scrolling in. Look where the price is. It hasn't even moved yet. We haven't even come to the, there we are. We're seeing that green candle. This is how low it has gone. It is insane. And let's just take a look. Let's take what percentage will we need to see for the price to reach $1? Let's draw it up. We're not even past bloody 1 cent yet. All right, let's go all the way up to the top. 26 cents, 50 cents, here we are, close to $1. $1 we would need to see. All right, we need to go up so much that the price just completely glitched out. 65, what is that? 284,000%. That's not even accurate, it's higher. It's higher than that, it's higher, it's 287,000%, guys. 287,000%. Honestly, I feel terrible if everyone's lost money on this, but it's time to wrap it up and chuck it in the bin, all right? We're going to go ahead and talk about Bitcoin. We're going to talk about the recent price crash. We're going to talk about the chances of this Bitcoin price reversing and going a little bit further down. We'll just do a quick analysis on that, and then we're going to go ahead and dive into some community questions and wrap up today's video, keep it nice and short and sharp. But guys, I just want to offer some of my personal advice. When I first started trading 7 years ago, full-time, before I went full-time, I blew through two full accounts. I had like all my life savings, around $8,000 each time, and I blew through two full accounts learning. And this was before the time where we had YouTube videos and we had people like myself on Twitter and Telegram teaching you guys how to trade or showing you guys the best ways to handle situations or act on situations or even coins to invest in. It was all self-learning, it was all self-taught, it was through trial and error. And at the time, I felt defeated. I felt very defeated when I lost all my money. I felt very depressed. I know the feeling of having no money and losing all your hard work, because although money isn't everything, it is an economic value that we gain through our time and hard work. So time and hard work in essence is where you trade your physical time to make this economic value. So it does feel like you're losing, in essence, you're losing life. But I just want to reassure you guys that at the end of the day, guys, money isn't everything. It comes and goes. And once you realize that money flows, it comes and goes, you realize that losing money is not a significant thing. It is equally insignificant as making money. It can come and go, it can come and go. What you need to focus on now, if you've lost money in Luna and you've got wrecked, I highly recommend you focus on your risk management. And the people have already told you this 100 times, risk management. Focus on the process over the profits. Focus on what you can do now from this current point to better yourself in the future, and try to let go of what has happened and focus on the future rather than thinking about how you can make your money back. Because the moment you try to think, how can you make your money back? You start making emotional and irrational decisions. Focus on what you can do now to profit in your next trades or profit in the future. And if you got entirely wiped out, 100% of your portfolio gone, all your money gone, you obviously have a bit of rebuilding to do, but you can do it. It just takes a bit of time, right? So hang in there. And I personally don't know any professional trader, any high level trader who has not been at a low before, who has not been wiped out or very close to wiped out. Falling off the bike is part of learning. Sometimes the falls can be brutal, all right? Sometimes the falls can be brutal, and that's why you should always wear a helmet and your safety pads. And in trading, your helmet and your safety pads are your stop loss and your risk management, all right? Always implement that, always use that. If you're trading without that, you are asking to get hurt, all right? Let's move on to Bitcoin. So we did an update on Bitcoin yesterday, and we said that if we can get a daily candle close above this red line, we would see a little push upwards to this $36,000 range. And you can see a daily candle actually rejected and closed below this uptrending support. And this uptrending support spans back basically from all the way from the March 2020, which is that COVID bottom, and we kind of trampolined off it again before we went into this impulse upwards into our first leg of that bull market. And we can see that the price has come down and retested that 26,500 zone on this downward trending support line that we've kind of established over the course of a few months. Zooming up on a smaller time frame, of course, we did say yesterday Bitcoin was in a descending broadening wedge formation, and we showed you that formation over here. And unfortunately, we have actually failed to break out of this descending broadening wedge formation. One of the reasons why I said that this was a possible reversal was because of this formation that we actually created, but we can see now without a doubt that in fact we did fail to break out, we rejected, and we're pushing back in. That doesn't mean we can't retest it, but what it does mean is we are now officially underneath that $31,000 major trigger. This is a trigger, all right? If we break the trigger, we push, all right? You shoot a gunshot, all right? Break the trigger, you push upwards. We are underneath the trigger, we are underneath the major resistance of this black diagonal line, and we're in this support resistance zone. And you can see last time we fell through the support resistance zone, we tanked it down. And we can definitely see another move like that if we lose this support resistance zone. The target, of course, 26,400. So that's the short-term analysis, guys. If you want to do a long-term analysis, go watch my previous video. But on the short term, Bitcoin isn't looking great. I think we're heading a little bit further down. And even if we do hit up here, like I said yesterday, the highest we can go, in my opinion, is 35 to 36,000. I don't think we'll go much higher than that. And if we do go higher than that, we do have our bullish validation points. We do have our reversal points on the chart. I want to go ahead and quickly go over a few questions that we got answered, a few people answered. And one of the questions is, MegaWhale, I would like a video on how to trade full-time for a living. How much capital do you need? What should you know? Is it even realistic? So, actually, I'm going to leave that question up on the side just so I can refer to it. It's a really good question, and I'm going to go ahead and answer it for you. So, you want to learn you want to trade full-time. So, first off, how much capital do you need? Well, everyone's going to be different because to full-time trade, essentially you would need to cover your entire weekly expenses plus some, all right? So you need to, first and foremost, be able to guarantee, or with at least a high degree of consistency, being able to cover your weekly expenses plus some from trading. So before you even ask how much capital do you need, what should you know, and is it realistic, you need to make sure you are consistently profitable. And what do I mean by consistently profitable? You're winning more profit than you're losing. Now, you do not have to make more winning trades than you lose. This is where risk management is important. If you make one trade that's a win and you make 1 to 10 risk ratio, and then you make 3 losses, and your 1 win covers your 3 losses, you're profitable. So it's not about winning more than losing, it's about making more profit than losing over a course of time. And if you're talking weekly or fortnightly, depending on when your expenses come out, that is your target. So if you are currently not profitable trading, consider dropping your investment amount. Sometimes emotions can come into play and impact your ability to profit. It makes you more irrational, it can make you think more irrationally and act more emotionally. So I would recommend, first and foremost, you need a good track record of profitability. I would say at least 6 months to a year, possibly even longer. If you're profitable over that period of time, now you know you have a chance to make it as a full-time trader. And I say a chance to make it as a full-time trader because even then, that's not much time. 1 year is not much time full-time trading. All right, a lot can happen. As we can see, we can get a whole year of bull market. You can think you're some kind of god at trading. You can make a lot of profit, and then you can get wrecked in the next 6 months like we've seen now. All right, so you need a little bit longer than a year to make sure, but that's kind of the essence. Develop your skills first. Number 2, how much capital do you need? Again, capital, it's all dependent on your expenses. So obviously the more capital you have, the more money you make. The less capital you have, the less money you make. And obviously trade quality, depending on the trades you take, you can make more money. But obviously capital allows you to have deeper pockets, meaning you can lose more and risk more and be able to go down in value a little bit more before you swing upwards. But sometimes you have downward swings, sometimes you have upward swings. What should you know? All right, so you need to understand, you need to have as a full-time trader, in my opinion, because I can't speak for everyone, because I'm a technical analyst, I'm a market technician, I base all my trades on technical data. For myself, and for what I recommend for you, you need to have a very, very detailed understanding of how supply and demand works. You need to have a very good understanding of how market capitalization works, so the fundamental principles behind cryptocurrency. You need to understand market patterns. You need to understand technical indicators. You need to understand measured moves. You need to understand validations and invalidations. You need to know how to set stop losses, horizontal, diagonal supports. You need to know how to put your entry and exit targets. You need to have a very, very high degree of skill in risk management, as well as pre-trade risk management and during trade risk management, which involves being able to scalp in and out of trades, being able to adjust entry positions and exit positions during trades. And you also need to be able to have a very high level of mental fortitude. Trading is much more than just decision, it is mental fortitude. Being resilient, being able to stick to your decisions without shifting. A lot of people can't stick to decisions. Make an analysis, stick to your analysis. If your analysis fails, it's because you didn't put enough time and effort into analyzing in the first place. And is it realistic? Yes, it is realistic. Plenty of people make a living trading. It is probably one of the hardest, I would say, and more time. It depends on your skill level. I would say initially when you're starting, it is probably one of the hardest careers you can go into. It is incredibly stressful. It gets easier with time. I generally don't find myself too stressed anymore. I'm so immune to losing money and making money. It's just another day in a life. But when you start, it is going to be very stressful. It is realistic, but like anything, it takes time. You can't expect to be a doctor tomorrow. If you want to be a doctor, you have to go to school, study for 4 years, do your placements, do your residencies, get all your certifications, all that kind of jazz. It takes a long time. Same with trading. You can't expect to just pick up cryptocurrency in 2021 and then be a full-time trader in 2022. It's not going to happen. People have tried, people have failed. It takes many years to develop your understanding of how markets move, to develop your understanding of how cryptocurrency price action works, trading, technical analysis, fundamentals. All of these concepts take time, and your investment in this will only make you better over time. So don't expect to have be a full-time trader next year if you're just starting out. It could take years to happen, but it can happen. Everyone has the potential to do it. I would also say some people are just not cut out for full-time trade. I would say some people are not cut out for trading in general. I think it takes a specific person to be able to objectively analyze charts and not allow emotions to get in control and in their head. It takes a lot of time to develop these skills, but some people are more naturally prone or susceptible to making irrational emotional decisions. And this could be because of their life experiences. It could be because of their view of money. It could be because of their limited availability of money. It could be a lot of things, but some people are just not either cut out for it or just not in the position in life to even consider it. And these are all the things you need to decide for yourself. I can't guide you on that. I can only tell you what it is, not what you should do. So I hope that helps. I hope that gives you a bit of understanding of what it is like. I'll give you a little rundown. As a full-time trader, generally I'll wake up, I'll scan the market. I'll always make sure to get my daily exercise in. It's really important to do your exercise, keep your mind and your body healthy. As you already know, I was a personal trainer for about 4 or 5 years. So I like to stay relatively healthy. It really helps with my focus and my resilience and my mental fortitude. I definitely notice on days where I'm not feeling too great, or I haven't exercised, or I don't have a clear mind, I make more rational, emotional decisions. That is completely normal. I would also recommend that you keep a logbook of your trades and you review and analyze what went wrong. That's really important. Just like any job, just like any skill, you have to analyze what you are doing and what you can do to improve. And generally midday, I'll do my trades. I'll leave my trades open for most of the day, depending on what it is. But you can expect a day in the life as a trader around. Most of your time will be spent in front of your computer, or at least thinking or planning for your trades. All right. Next question. Next question. Okay, so we get asked, Bitcoin, is the bottom in and can we expect lower for altcoins this year? Good question. Cool. We're going to bring up a new chart for that one. So we've covered this a bit already, and we talked about this a bit yesterday. We'll talk about it again, why not? So is the bottom in for Bitcoin, and can we expect the price to drop lower for altcoins? So I'm just going to go off the bat and straight away say, if Bitcoin drops lower, altcoins will drop lower. Nothing more to say. If Bitcoin drops lower, altcoins will drop lower. All right, here is the chart we're going to analyze. So we can see on the 1 day, I'm going to go to the 1 day chart. We can see that the bottom is projected to be anywhere between 24 to this gray zone. Now I did a video at the start of the year, it would have been late December actually, and I did talk about the probability of us bouncing in 24, and I actually said my range was 22 to 26. And when I say 24,000, I don't mean bang on 24,000. That 22 to $26,000 range, that 5% plus minus for a bottom prediction is pretty accurate. That is kind of where I'm leaning towards. And the reason I say bottom is because that's where we have actually bottomed out. So close that weekly candle at that point. Now for the lowest price, I think we retest this uptrending support line. All right, this is the lowest price I think we retest. So we can see a wick down and we can push up. Altcoins will not move upwards until after Bitcoin has had its initial move. So let's just assume this happens to start off with. Let's just assume this will occur and assume the price will come down with 100% certainty, and this price action will occur like this. What will happen to altcoins? So let's take a look. And I've gone over this a few times already, but I'm just going to go ahead and show you one more time, just so you can see again what I mean by this. And we'll bring up our Bitcoin chart again, and we'll go ahead and just split the chart, and we'll bring up our altcoin index. So here's our index. And we'll go ahead and we'll put both of these charts on the daily, and we'll be able to compare these a little bit more. So we'll just zoom into about this point here, and hopefully you can see this on the chart over here. But if you can't, maybe actually what I'll do, I'll go to 3 day. It might be a little bit more clear, a little bit more zoomed in for you guys to see. Okay, so here it is. All right, so we have our lines on this chart. We're going to just quickly go ahead and draw these in so we can see we have the same line over here. So this is the bottom, all right? From the bottom, all right, which was, if we go back to this chart here, this point over here, this circle over here, from this circle over here, this bottom point here, all right, Bitcoin saw a rally of about 10x, a bit over 10x, 11x, all right, to this initial top, all right. If we go ahead and draw a line over here and then take a look at altcoins, that line is in the same position as this point here. So in the same time Bitcoin did 11x, altcoins on average did around 6, all right. So we already know that altcoins should be purchased later on in the cycle after Bitcoin around the halvening. And I know Wolves have talked about that a lot. Around the halvening is where you want to look at buying alts. That second half, after that initial drop down on Bitcoin here, and this rally upwards, altcoins saw the predominant gain of around 393%. All right, where Bitcoin went up around 160, I think. All right, maybe a little bit less, maybe 120. Let's take a look actually. 120, all right? So your question to that is, let's just bring up your question again. Is the bottom in? Can we expect lower for alts? Yes. The question is yeah. The answer is yes. If the price goes lower, we will see altcoins drop more. And we know that because if we go ahead and take a look at the Bitcoin dominance chart, and I think I've got an alarm that's about to go off in 2 minutes. I just want to quickly turn that one off. There we go. All right, we take a look at the Bitcoin dominance chart. We can see that every time Bitcoin dominance pushes up, in comparison, altcoins take a heavy hit. All right, so we just look at the chart over here. Bitcoin dominance pushes up, altcoins take a heavy hit. Bitcoin dominance pushes up from here, altcoins take a heavy hit. All right, so because this is showing you the amount of money in the market contributing towards Bitcoin's market capitalization in comparison to other coins. So when this rises, it means money is being drawn away from alts and going to Bitcoin. All right. Now you combine that with the fact that the total cryptocurrency market cap is dropping. It means, or it puts it in a position where altcoins are bleeding a lot more extremely and heavily in comparison to Bitcoin. So if Bitcoin drops, Bitcoin dominance will rise, altcoins will bleed more. All right, the bottom is not in at the moment. We have no confirmation of the bottom being in, and I think it's really important. Technical indicators will not tell you the exact date of the bottom. They will only tell you the bottom after the fact. It will be slightly after the fact, but it's after the fact. I just want to reinstate, it is not our intention to predict the bottom to the exact dollar. I have absolutely no intention of predicting the bottom to the exact dollar. You can predict the top to the exact dollar like we did in both occasions. We predicted this bottom over here to the exact dollar like we did, but this wasn't a macro bottom. Predicting a macro bottom is very difficult. Our best guess to predict a macro bottom is to go off our historical data, which is the 200-day moving average and this uptrending black support line, which will put it around 16,600 to 18,000. If we lose the support line, we'll see something else happen, which we talked about in our previous video. Okay, let's go on to our last question. Perhaps a quick coverage of leverage trading pros and cons in the bull and bear market. All right, so I think the distinction between bull and bear market is irrelevant. I don't think it matters. We're not going to go ahead and talk about it. We're just going to talk about pros and cons for leverage. So pros number one is that it allows you to leverage your position, meaning you can take on more capital through debt than your capital will originally allow you to use. So you can go ahead and take larger positions. Of course, that is basically the only positive. So yes, you can make more profit. That's it. That's the only positive. The negatives are you have liquidation, so you can basically lose all your money. You have the price will fluctuate in terms of percentage profit much faster. Therefore, you can be more emotional and you can make irrational decisions much easier. Number three, it is incredibly difficult and requires a very good understanding of risk management, and only professional and skilled traders should be using leverage. Leverage is like a beginner swimmer or something jumping in a pool, doing one lap and then saying they can swim across like the Bass Strait or something crazy that's like by themselves with no assistance. It's like taking a beginner and putting him in a match with professionals and expecting him to perform well. It is most 99.7% of beginner traders in leverage trading are losing money. They're losing money, and they're losing money because it is difficult. Emotions will mess you up in leverage trading if you don't know what you're doing. If you can easily get greedy and over leverage. You make one mistake, your entire portfolio is gone. Keep that in mind. Leverage trading is too risky. You should not be using it. In cryptocurrency, the market is very volatile. You do not need leverage to make money in crypto. I do not use any leverage. I made probably one leverage trade this year on Bitcoin. I 100x shorted the shit out of Bitcoin around this point here, and I made like 200% profit and I sold out. That's it. Took a small scalp and I got out. All right. I would never use leverage. I don't intend on using leverage. I don't recommend using leverage. And I think if you're going to use leverage, it is a ticking time bomb waiting to explode in your face unless you are very skilled and you know exactly what you're doing. And it takes many years to get to that point. So if you're using leverage, expect to lose. If you make profit, consider yourself lucky. You got lucky like you get lucky at a casino. All right, that is all it is. Now, some people here probably only trade on leverage, and I'm not talking about 2x. I'm not talking about 3x. I'm talking people who trade like 25, 50, 100, 125x. That's the kind of leverage we're talking about here. If you want to trade 2, 3x leverage, go ahead. It's easier. Maybe you lose a bit more money, but you just need to adjust your stop losses you need to adjust your entries and your targets. That's okay. It's pretty much the same trading as normal. But if you're trading with high leverage, you're going to get wrecked. All right. So before we get out of the video, I just want to quickly introduce BitGet. I wanted to quickly introduce my new favorite exchange, BitGet. BitGet is a non-KYC exchange, which is particularly beneficial for members in the UK and Australia who are limited by certain trade restrictions. BitGet has 250 plus spot trading pairs, as well as 60 plus leverage trading pairs, up to 125x leverage. Sign up now in the link in the description using our referral code to get up to $153 in rewards for completing 4 separate tasks. Let's go ahead and dive back into the video. And one more thing, guys, remember our Crypto Academy course launches in 2 days. If you want to learn how to become a full-time trader, as per those questions asked, if you want to learn everything you need to know, technical analysis, market analysis, stop losses, entries, positions, we go through everything, risk analysis, how you can manage your trades, hit the link in the description down below. Contact us, cryptoacademycourses@gmail.com. We'll send you all the information. All right, you get a nice pre-order discount if you order within the next 24 to 48 hours. All right, thanks guys, and I'll catch you in the next